Hey traders, welcome to the Top Tier Outlook. So it is Sunday. We are on a long weekend, but it doesn't mean that I'm going to break the good habits that I do week in and week out, keeping an eye on what the watch list is, what is the path of least resistance or least support if I'm looking at a move to the downside, and just getting ready for the trading week. And even though the trading week starts on Tuesday, for me, it allows, all of us, hopefully you've got a practice like this. And that is, so just to put the date up in here, today's the 1st of September, which means I've got all of August price action that I can download from my brokerage. We could get these nice little XLS files, and I can upload that into any one of the really awesome trading software that analyzes your trades, or trading journals or trading analysis type software. I've been using TradesViz now for I think about 2 years, just over 2 years. But I don't want anyone to think that's the only one. I've tried TraderSync, Wingman Tracker, TradeMetria. They're all great. I've just been really enjoying using TradesViz. So pick one, even if that one is an Excel spreadsheet. And what you want to do is take all your trades. So this is really important. We take all the trades. I like to separate them into day trades, position trades, so my longer term stuff, my really short term stuff, and swing trades. So I'll upload or tag my trades in such a way that I can separate those three styles. That's number one. Number two then is I want to make sure I'm separating my futures trading from my stock and ETF options trading. That's kind of number two, or however you're divvying up your activity. Now I want to look at all the entries that I've taken in any particular trade and study the overall result. Not, let's say we scaled in at 2 or 3 levels. Maybe the aggro level got stopped out, and that can happen from time to time. And the moderate and or conservative is what ultimately was the winning part of the trade. Maybe the trade hit aggro only and stopped out. What are all the different scenarios? But the first thing is, make sure you're being realistic about yourself, about your trades to yourself, and that you're looking at all of the entries and all of the scale outs. And that's going to allow you to look at a really merciless, that's kind of been my thing, be tougher on yourself than the market can be on you. So I really want to dissect my trades for every single entry and every single exit. Maybe I could have been more conservative and wait for a better fill in a zone, or maybe I should have been more aggressive because otherwise I would have missed a trade altogether. But those are the kinds of things that at the end of the month, the beginning of the next, especially when we have a long holiday, I'm able to do. So this week, by the way, if you're in the Sector Secrets Mastery, or heck, we'll probably put this on the Countdown Trader, I'll share with you all the August TradesViz, because it's on about 1 or 2 home runs we might have hit. We had a couple really good home runs in August. I'm thinking of things like Coke, GLD, Newmont Mining. We had a couple really good trades, but I want to also take a look at what some of my losses. I think we had a losing trade in Pfizer for a swing. We had very few losers in August, but this was definitely one of them. But I want to take a look at all of the trades, right? Not the ones that were the 3 biggest, certainly not the ones that are the losers only, just a really good balanced look at everything you did. And that's where I come back to find a piece of software, upload your XLS files into it, and really take a look at what you did. Sometimes when you dig in, you'll find that 1 or 2 really big trades made up for a lot of kind of maybe not so good trades that were losers. I say not so good because maybe those were trades we shouldn't have taken at all. Unless we take a good hard look at them, we wouldn't know. And they're masked by the good trades. That happens to a lot of traders because you're looking at their net liquidating value or their P&L only. And a lot of the times that can camouflage some really little small mistakes now that can get worse, repetitive, or larger as you continue to trade. So look at everything. I hope I really drove that home, because that's a big part of why I can look back year after year and say, you know what, I always end every year with more than I started, and I've never blown up an account. And it's practices like this that make the big difference. So let's go to a little bit more of what the plan is for the upcoming week. So we're going to take a look at our trades for August, and we're going to take a look at what we traded for August. So the next part of that is, well, was my attention in the right spot? And I'll tell you, there's very little that I can say, and it's usually not this way at the end of a month. I'm usually not always as happy with my with my trades at the end of the month. And I can say the most critical thing, I like to start there. The most critical thing I can say about my trading is that I probably wasn't pushing some of the better financials outperformers as much as I could have, because as we look at the last month, you can see XLF and XLV continue to be really great outperformers. So that's the critical part first, right? Be tougher on yourself than the market could possibly be on you. It's easy to say, look at the winners, look at this trade, look at that trade, without looking at the things we don't want to look at. Right? No one likes to look at a loser. No one likes to look at any trade that's going against us, right? I get that. But the only way to grow an account is to look at everything. The only way to grow an account is to look and say, hey, was I looking at the best relative outperformers on this list? That's a great place to start. Where was your watch list at? Where, for example, anyone out there, were you looking at things like oil services, oil and gas explorers and energy, and saying, gosh, that didn't really go anywhere? There's a reason. They're still negative on the month. For example, did you find yourself looking at semiconductors and technology in a way that maybe didn't merit it? Yeah, NVIDIA had earnings, but does that mean that that's where the best opportunities are? So a lot of times, some of the biggest errors in account growth, aside from how you place your stop loss, aside from position sizing, aside from all the metrics, the formula of account growth, sometimes the most basic part of it is what were we trading? And so this is where I could say, hey, you know what? We really kept our eye on the ball. We focused on staples a lot. We focused on gold and gold miners. We focused on utilities. And I want to add a few more names to the list, names that really didn't spend a lot of time in August outperforming. Now, all of this entire box is not great, right? The best part of this is utilities, real estate, financials, gold miners, staples, healthcare, industrials. You can throw communications in there, and basic materials. And right there, this is at either 3% positive on the month of August or higher. XLK is doing okay. It's up 2 1/3. SMH is up 2%. XLY was up 0.8%. And ITB, the home builders, home construction, up about the same. So these are okay. They're not as strong as obviously your top 4 or 5 names. So if you're finding yourself struggling with that account growth, before you get to, oh, I'm lacking this indicator, or I really should have been trading this particular option strategy versus that strategy, or maybe it was futures versus options, those kinds of things. Before you get to that level of, this is where I could have done better, go back and ask yourself, forget strategy, forget the indicators for a moment. Go back and ask yourself, was I positioned in the things that had the highest probability of following through? And I know that sounds so basic. And yet, when I see just the overwhelming attention the last week or two on things like NVIDIA, I made it pretty clear, and I don't mean this in any way other than to sort of be hard hitting, but not disrespectful. Who cares? Right? I mean, really, who cares? If NVIDIA has great earnings, fantastic. If NVIDIA doesn't, no problem. There are other relative outperformers in the broader averages in the sectors that are weighted within them. So a lot of times you get caught up with whatever the story is that they're dictating on television, rather than, do you think that the television's talking about utilities right now? Right? Why not? Boring. It's so much easier to talk about things that really don't matter but might be attention grabbers. Are they going to talk about real estate right now, financials, gold and gold miners, and consumer staples? I can't remember the last time. Maybe financials, they uttered a little bit about it, but when's the last time you heard any of these sectors uttered on television or just general financial media? Next to never, right? And that's the problem, because then that seems to direct attention to things that seem like they should be important, but they're really, really not. Now, you might say, Rog, well, isn't NVIDIA important? It is, only in so much as it's weighted in a handful of places. Obviously, the NASDAQ, XLK, SMH, and really the S&P. Because of its weighting as one of the Magnificent Seven, its impact is going to be felt in those places. But who doesn't care about NVIDIA? Utilities don't give a rip. right? Staples don't give a rip. The Dow really doesn't care. The Russell really doesn't care, does it? Gold miners, Nvidia, who, right? So if you say to yourself, well, maybe I don't want to trade that narrative. And Raghee, I hear you. A lot of times what's being talked about is not necessarily what should be on the watch list, but what do I do instead? You can shorten your time frame and day trade, or you can focus on sectors where the weighting is next to meaningless. It's just not a factor. And that's why, as we went into the latter part of last week, we were in things like bonds, we were in things like gold, we were in things like Coke, right? That's why we were in those places, because that way, no matter what NVIDIA does, we're not in that impact zone of that earnings. And please remember, I did a pretty good breakdown. I thought it was pretty good in Charts and Coffee about NVIDIA and the fact that in reality, it missed. This was an earnings miss. You might say, gosh, Rog, that's not what I heard on TV. Yeah, heck with what they say on television. I'm telling you right now, if you look at the expectations, the whisper numbers, what was factored into NVIDIA in the weeks and days before the earnings from a revenue and an earnings per share standpoint, it really wasn't a big beat on the, I'm trying to remember what it was that missed. I think it was revenue was pretty good. It was just a little bit bigger than expectations, than whisper number expectations. And the earnings per share was a 1 penny miss. I think it was 68 versus 69 cents. So it was a little bit of a miss. And you might say, gosh, Rog, that's how price seems to have moved. It didn't act like it beat, like you probably heard on TV, right? It's acting like it missed because it did. The metrics of measuring what's happening in an earnings result has nothing to do with company guidance. It has nothing to do with Wall Street consensus. It's about what are those whisper numbers? What are those expectations beyond those metrics? What are those expectations at in the weeks and the days before earnings? And then that is what earnings is compared to. And that was pretty disappointing. And you can see that's exactly how price moved. It wasn't disastrous. Hear me out. Revenue was a little bit better and earnings per share was a 1 penny miss, but there's no reason to propel NVIDIA up through 140 or something, right? So I think there are some better looks out there. And really that's what we focus on in the mastery. You know, what if there's anything, if you were to say, Raghee, what are 3 things I can do right now to, end 2024 in the best way possible? We've got 4 months ahead of us. What's the best way for me to go forward from here? Well, let's do this. Let's take a look at the QQQ and start with the most basic thing in the world. What time frame are you looking at? It's going to be part of this. You want to be a day trader or a swing, but let's presume we're all looking at daily time frames and swing trades together. Focus on things that have a higher probability of follow through. You might say, okay, Rog, as I'm looking at the NASDAQ, what are they? I would keep an eye on Apple. Absolutely. I'd actually keep an eye on Costco as well, and Netflix. Keep an eye on Meta. That's pretty much it. NVIDIA looks okay. Microsoft right now is a no. I'd be cautious with Amazon. I'd leave Tesla alone. That has yet to even print a neutral candle. It had a pretty big bearish environment bounce, but it's still very, very heavy, as you can see. Choppy and heavy. Leave Google alone, right? So it's really a matter of trade this, not that, in the first run through a list. And if you find yourself, gosh, Rog, I was trading Tesla or I was trading Google, I thought I put a great trade on, but it didn't follow through. Your trade execution might have been great, but what you chose to trade, not so much, right? So again, if you're thinking about, okay, Rog, what is it then that you do differently? This is it, right? This is really what we do differently. And I think one of the best things you can do is understand what relative performance looks like. I know for me, that was a big needle mover. So when I saw that what was being talked about on television wasn't necessarily where the trends were. No one's talking about Coke, are they? Coca-Cola is doing fantastic, and all anyone can talk about is NVIDIA, yeah? So if you're looking at, say, utilities, who's talking about utilities? We are, right? There's a lot of great strength here. This is the sector performance. And again, most traders are just simply not going to look here because it's not, looking at Nextera and Duke and AEP and Dominion. These aren't the names that are Magnificent Seven, which again tend to take way too much of traders' time. So if you just say, look, I don't care where the trend is. If it's in a defensive sector right now, I'll be cognizant of that because real estate, staples, and utilities are largely defensive sectors, meaning there's still confusion. there's still uncertainty regarding the broader averages. So why not sort of wait it out in the things, in the stocks, in the places that we know no matter what people need? Utilities, everyone needs power. Staples, think about what's in that staples category. We're going to need the things that are in staples, things like Procter and Gamble. We're going to go to the places where they sell the staples, like Costco and Walmart. There's certain things that are just going to get bought no matter what. Soda and cigarettes. I hate to say it, but there it is. Soda and cigarettes. Here's Colgate. No one's going to stop brushing their teeth, right? Kimberly-Clark, all those products that we need no matter what, right? And so that's where it's a defensive. And they're not necessarily, these names are not heavily weighted in the Dow or the S&P. So it's that distance from the Dow, it's that distance from the S&P, it's the lack of weighting, any meaningful weighting, that makes these an interesting place to sort of wait out the concern, the confusion, that uncertainty. And that's where XLP, utilities are going to continue to be things we want to watch. And then there's also gold miners. That's something else that we've been trading. So again, don't be uncomfortable. Get really comfortable being in places where the discussion isn't right now. This I can tell you, because we talk about this as consistently as we do, you'll eventually find folks talking about utilities. It's been 2 months nearly in the making. You'll find eventually folks will start looking at staples. Again, that's been 2 months in the making, but in waiting on those 2 months to finally say, oh, wow, those are in uptrends now, sometimes you'll miss some good entries. So if you follow the process that we talk about here in Top Tier or in Charts and Coffee or in the Sector Secrets Mastery, you can be on that leading edge of transitioning from, gosh, I may not really want to trade energy or tech right now. I'll just shift my attention here. Oh, wow, financials and healthcare are starting to move. Maybe I'll shift my attention there. So keep the process in mind. And it's very repetitive. And because we're focusing on data and not, our feelings or our thinking, it makes it much easier to follow the process. All right. So again, markets are closed. It doesn't mean that I can't go back and take a look at the performance in August. I'll be sharing those metrics with you all via TradesViz. I do want to let everybody know on October 5, I have got a class coming up. And that's going to be in a lot of the things that we're talking about right now: watch list building, position sizing, risk management, and all those metrics that belong to the one thing that all of us can agree upon. We are here to grow an account. We're not here to have a home run. I'm not here to make some huge single time trade, right? This isn't the Big Short. We're here to consistently grow an account. That's the reality for most traders, right? And so rather than thinking, oh, I just need that one big trade and that's going to take care of everything. Pretty sure Michael Burry and John Paulson had billion-dollar years back in 2008, and they're still trading. So we want to have that consistency. We want to have that pipeline of opportunity open. And it's a lot of what we've talked about here. Then we want to go back every month and study, hey, were we looking in the right place? What could we have done better? And so, keep that in mind. I think it's on the 5th. Yeah, class is on the 5th, which means we'll have a webinar on the, I think the 24th and the 2nd. So just kind of pencil that in. It's about a month away, not even, just 3 weeks away, September 24 and October 2nd, with the class on October 5. All right, so a couple questions here. Do I look at the sectors each day? I do. It depends on what type of trading I'm doing, but I do look at the sectors each day, Ren. If I'm day trading, it's a one-day normalized performance. If it's a swing trade, it'll either be the month to date or the 1 month, but I do look at them almost every day. Yeah, I do look at them almost every day. All right. I've had good profit from trading Duke and CEG so far. Okay, let's go back to utilities. Bear with me. So utilities have absolutely, the trick with utilities, and you probably saw this, Joe, is really simple. It's finding the stocks that have the liquidity in the option chain. But, CEG should be, when I'm thinking about follow through, NEE is going to be near the top of that list. Southern's going to be near the top of the list. Duke. So as long as there's liquidity, I would say focus on that. But if I'm looking at the option chain for, say, CEG, now look at the CEG. It depends on where you got in, of course, Joe. But I would focus on, and I think Duke's a really good one. CEG, it's been going back and forth in a range. So if you get the range Right. The cool thing is at least you have some decent liquidity when you get out to say 200, right? But the reason CEG for me would not be on that list is the liquidity right now for September 20 is too low. Now you might have had better liquidity for August 16 or August 30, but right now the liquidity for me is too low. But I wholeheartedly agree with Duke, and I'd throw NEE on that time frame as well, maybe Dominion as well. But when that high tide is lifting most of the boats, it's hard to find something that probably won't wander higher. What is my time frame for my trade when I said no to Microsoft? The daily. Yeah, I can't obviously talk about the day trades. So if I'm looking at Microsoft on a daily time frame, it's a big cup of nope. But for a short-term swing, Joe, a short-term swing, 1 hour might be interesting. What is my time frame for my trades usually? 5 minute for day trades, 1 hour for short-term swings, daily time frame for longer-term trades. All right. Next up is the class posted at? Oh, I'm just giving y'all a heads up. This is super early in the process. We've been testing out a lot of the metrics and the spreadsheets and the processes that we're going to teach in the class the last 6 months, including what I've been doing with SPX, because SPX is just such an intense version of taking the process and just running it through a stress test, right? Just running it through the race course, trying to break the race car kind of thing. So yeah, it won't be posted or anything. I'm just letting you all know we've got the dates. I know what the dates are, so I'm passing them on to you all. So we'll have a couple webinars coming up. Like I said, the 24th, I believe, of September, the 2nd of October, and the class is on the 5th. You'll get emails. I promise. Yeah, you'll get emails. So as far as the time frame goes, yeah, it's really simple. And this is another thing I would really caution traders from, because I see it all the time, and I just find it mind-boggling. I'll watch traders out there in trader land. One day it's a 4-hour chart. The next day it's a 30-minute chart. The next day it's a 1-hour chart. Oh, today we're looking at the weekly time frame, and now it's a one. I mean, it's ridiculous the amount of time frame jumping like it's a hot potato that I'll see. It is impossible to week after week just keep shifting the time frames, right? The moment you see that, run, because there's no consistency in the process. With me, I found that day trading on a 5-minute time frame works best. Short-term swings, say 1 to 3 day time horizon and a 1 hour works best. I should say works as in tests. Everything is tested. Tests best. And then daily for the overnight swings, that might be 2 to 10 days. So when you're trying to find something to trade, and then you're also trying to find that one time frame that it's best to be traded on, I think that's where the wheels fall off the wagon, because now you're sort of having to pick the right symbol twice. What symbol and then what time frame? So whenever I see this time frame jumping, not, hey, I'm going to day trade now and swing trade on this, right? That's not time frame jumping. What I mean is 1 week it's an overnight trade on a 4-hour chart. The next week it's an overnight trade on a 30-minute, that type of thing. If you find yourself doing that, I would say look at less, because I used to look at 6, 7 time frames, totally guilty of it. And I would look for different types of longer, bigger picture confirmation. And I abandoned that completely. I do not use multiple time frame confirmation. If I'm day trading a 5-minute time frame, it is built, confirmed on that time frame. I don't give a hoot what the hourly or the weekly or the daily is doing, right? The 5-minute will tell me everything I need to know, as long as I've got the right levels on there. And then if I want to take something overnight, but I want to keep the time frame short, there's one time frame for the job, and that's a 1-hour chart. And then if I like the trend like we do on Coke, and I want to be in it for as long as I possibly can, that's going to be on the daily. We have daily gold positions. I say daily as in daily time frame gold positions, daily time frame Coke positions, things like that. So, I think that the toughest thing for a lot of traders is to say, gosh, I see it's talked about on the YouTube, or I see it's mentioned on television, and just saying, look, until I can be shown the proof, and I don't mean the well-chosen example. I mean, hey, Rog, yeah, you made some winners like Coke, but what were the losers like? How much did you lose when you lost? Right? That's where the trades viz comes in. That's where I like to share, hey, this is what we did over the last month, or this is what we've done over the last 3 months. Because going back years and years doesn't matter either. right? Because if someone wants to go back years and years and tell you how they did in 2020 and 2021, everybody did well then, right? So I think there is kind of a rational window of, hey, Rod, what's going on right now and how are you doing? Case in point for this month. The first 3 months of 2024 were just absolutely trending, and the relative performance had gorgeous uptrends that just continued to dip and go and dip and go. And the first 3 months of the year was practically as good as any uptrend that I've traded in a long time. And then things changed in April. So if someone were to say, yeah, I'm trading really well and cite those 3 months, well, I think most traders did really well the first 3 months. I know we were killing it in the mastery because everything was trending and following through beautifully after pullbacks, right? We can't control that part. The part that we can control is the risk management and the position sizing and what we can trade. And funny enough, it's those three things that really make a big difference in terms of the metrics of account growth. One extra thing that I threw in the video that I did on Friday. If you head on over to the Simpler Trading YouTube channel, which many of you are probably there right now. If you head on over to YouTube and you click on the, Simpler Trading channel and go to the videos. Here we go. Yeah, this one right here, the 3 things stopping account growth. Check that out. And one of the things that I mentioned, these darn ads. There we go. Of the 3 things that I mentioned, hey, and by the way, I talked about the seasonals as well in that video, so feel free to check it out. But you'll notice the 3 things that I talked about is the position sizing too large, too much risk to target. I can't tell you how often traders will take 60, 70%, 50, 60, 70% unrealized loss on a trade and then take 20% off the table. That does not scale, because if you flip a coin and you lose 5 times and you win 5 times, you might say, oh, you can never go wrong taking a profit. That is not true. You can lose money taking a profit if your consistent losses are bigger than your consistent wins. And if it's 5 and 5, 10 trades, coin flip probability, right? Which is as bad as it can really get for a trader, right? Just coin flip. If you have that upside down risk reward, you're risking max debit, but you'll take 30% off. Or you buy an option for $2, you let it go to 50 cents, but oh, hey, it came back. That's way too much risk. And that's where a lot of traders are getting hurt in this concept of risk to target. And the last one is actually pattern day trading. For a lot of traders who have less than $25,000, you're going to run into that pattern day trading rule in just 3 trades. In a 5-day span, once you hit that 3rd trade, that's it. And you got to wait. And that causes traders to have to cherry pick, right? Oh, I'll take this trade, but I won't take that trade. Oh, I guess I can't day trade. It puts too many limitations on trading. So you might say, Rob, what do you do? Long calls, long puts, cash account. And if all this stuff is starting to resonate after you've heard me talk about this sometimes, depending on how long you've been watching the shows, for weeks, if not months. Yeah, when I start showing you what we've been doing in the mastery, and all the examples that I use, the examples that we do in the mastery are the trade setups. So I'll show you what we've been doing, what our members have been doing, what I've been doing, and then I'll show you where we're looking and how we're dealing with the current environment. And the current environment, by the way, gang, is not as doom and gloom as everyone likes to think for whatever reason that it is. Remember, the world was supposed to end on this, the 2nd to 5th, right? Remember, that was going to be it. Carry unwind 2.0, game over. That's not exactly what's happened, is it? All right. So now we're at a tie ball game. We've come back to on the S&P where things were before the wheels fell off the wagon. And NVIDIA earnings were not terrible. They weren't great. So we're not quite back up to the levels we saw in the beginning of July on the NASDAQ. So, and that makes sense, by the way, if you think about it, because financials and healthcare don't benefit the NASDAQ at all, right? They benefit the Dow and the S&P more. So it makes sense why when you see this thing going straight up, when you see this thing going straight up, oh, this is why the NASDAQ is lagging behind the S&P? Yes, because 2 of the sectors, the cylinders in that motor of the S&P, are firing off better than things like XLK and SMH, right? Here's XLK. Here is SMH, the 2 places that NVIDIA is so heavily weighted. Hence why the NAS isn't keeping up. It's not a calamity that the NASDAQ isn't keeping up, right? It just means that other things are performing. And that's really kind of the theme we're going to take as we go into these last 4 trading months of what has been a really good trading year, I will tell you. Make sure you're being very conscious about where you're looking for opportunity. Not this is what everyone's talking about, this is where the news is, versus this is where the trends are. I mean, look at that in XLF. I mean, JP Morgan's going to make a whole lot more sense to be trading than, say, Tesla, right? And yet one's going to get a lot of attention, the other's not. So guard the gate of your mind, gang. Guard the gate of your mind. All right. So anyways, a little extra time here on our top tier outlook. As always, thank you so much for being here. This is what we're going to do, be focusing on as we go into September. Super stoked for what we have coming up in the next 30 days. It's going to come fast and it's going to be really great because, for a lot of traders thinking, Rag, I've got indicators that I like, I just can't get them to work. Or Rag, I've got a process that I need to fine tune, but it's what I want to stick with. Watch list, position sizing, risk management, and just understanding how much pattern day trading could be affecting your trading. It could be just that simple, right? So that's what I'm scheduled to talk to y'all about. We're going to talk about a lot throughout September. Be good to each other. Enjoy the rest of your days off, your couple of days off here. And if you haven't already, go find a trading analysis software. Again, I use TradesViz. Find whichever works for you, and I'll be sharing with you all this week our August results. Okay, until then.